National income, product method. At the very outset, we must have an idea about national income. I mean, not the definition. There are so many national income concepts. Gross domestic product at market price, gross national product at market price, net domestic product at market price, net national product at market price, gross domestic product at factor cost, gross national product at factor cost, net domestic product at factor cost, net national product at factor cost. Of these, which one refers to national income? The concept NNP at factor cost is called national income. This tutorial is about calculation of NNP at factor cost. Hereafter, whenever I mean national income, I mean only net national product at factor cost. There are three popular methods to estimate national income. They are product method, income method, expenditure method. In this session, we shall discuss the product method of calculating national income. This method is also known as value added method or output method. To avoid the error of double counting in the calculation of national income, we shall concentrate on the value added technique as employed in the product method. This method starts with the estimation of sector-wise contribution to national output. So, the first step is to classify the economy into sectors on the basis of the kind of productive activity taking place in it. Take these units: agriculture, forestry, fishing, mining, and quarrying. They process the natural resources. They are grouped under primary sector. The firms such as manufacturing, electricity, gas, water supply, transform raw materials into finished products. They simply change the form of the products. These units are brought under secondary sector. Take units trade, transport, communication, banking, insurance, government services, and professional services. They engage in the production and sale of non-tangible goods, that is, services. All such units are grouped under tertiary sector. Next step is to calculate the money value of the output for each sector at market price. From this, we have to find the gross value added by these sectors. For this, we have to deduct the intermediate consumption. The sum total of the gross value added by these three sectors is the gross domestic product at market price. If we subtract depreciation from the gross value added by the sectors, we will get net value added at market price. Their total will give us net domestic product at market price. Now we are to deduct net indirect tax from net value added at market price. Net indirect tax is equal to indirect tax minus subsidy. We get net value added at factor cost. By adding these values, we get net domestic product at factor cost. To obtain the national income, we have to add net factor income from abroad. Net factor income from abroad is equal to net value added at factor cost by domestic factors abroad minus net value added at factor cost by foreign factors in the domestic economy. National income is equal to net domestic product at factor cost plus net factor income from abroad. That ends our discussion on product method. Thanks for watching. Meet you all again.